Let's look at another slide from you there. We see the performance of some Nigerian banks, for the first quarter.
Yes.
How do you see the performance?
Well, at the beginning of this year, we thought the banks were toast, that they were done, right? But we've seen some very interesting trends recently. I think it was overdone. They've sold down. But if you look at the banks, the Tier 1 banks are doing very well. 12 of them have released results. They posted a total of 275 billion naira. But the most important thing is their cost-to-income ratio, which has shown that they are bringing it down, not as competitively as the African counterparts, but they are now bringing it down. The big risk of the Nigerian banking system is that they have euro bonds, and the price of, because interest rates are going up, and they have to refinance some of these euro bonds at a more expensive rate in foreign currency. We may have that, and God forbid, if any of them defaults or staggers, then there could be a problem. But when we look at it, we like what we are seeing at Zenith Bank, we like what we are seeing at UBA, and we like FirstBank actually surprised because, they had their boardroom issues and all of that, governance, but they've come around and they brought their cost-to-income ratio down from 79% to 67%. That is phenomenal. We've also seen that they've restructured certain things. Basically, I think one or two of their loans, which were shaky, have been restructured, and that has helped. So you'll find that they've actually made a recovery of bad loans working. Some governance structures are being put in place. There are still challenges, mind you. They have good geographical prints, but branch network means nothing these days. It is converting into a digital channel for consumers, and they've actually grown their businesses pretty strongly. I never used to think that FirstBank was my mother's bank and all that. But recently I've seen a lot of people say, okay, FirstBank is actually the pioneer bank. They started over 120 years ago. But they've remained relevant, and they've been able to reinvent themselves and compete. Okay.
How do you see this playing into their stock prices? Any big move as expected at this point?
I think to a large extent some of the banks are underpriced. The stock prices are But I am somebody who likes to buy into weakness and sell into strength. So I like the Tier 2 banks. Why do I like Tier 2 banks mainly? But the Tier 1 bank that we were talking about, FirstBank, because their stock was shredded by the market. People just wrote them off. So there's a lot of upside for them to get to fair value. So it's something it's a buy, right? The other ones are consolidating their position, economies of scale. You'll see UBA, Access Bank, Zenith, GTCO.